In the final segment of our last video, we identified a key market turning point on December 19th, where a strong rally was anticipated following the sweep of the previous day's low within a discount zone, resulting in a complete gap fill on the H1 timeframe. On the 5-minute chart, we can see the signals that were generated across both the London and New York sessions, providing opportunities for scalping, day trading, and swing trading. The trigger times and measured moves up to this point have been annotated accordingly. Be sure to monitor these two critical buy signals to track the maximum potential gains, as there is still ample scope for further drive upward while price rallies toward a higher timeframe opposing key zone. On Monday, December 22nd, a buy signal triggers during the New York session at 1550, offering long trade opportunities, with valid active positions currently running in profit. Again, monitor these bullish moves based on the price entry levels and timestamps shown in the trade terminal below, and post the full measured moves in the comments section. Buy trades now exited, following the sweep of the New York range high. The sell signal shown here fired at 2025, producing a corresponding short position, taken based on Sheik's strategy entry option 3, a retracement-based entry. Now, while our primary focus in this market phase remains on buy signals, we continue to highlight opposing signals that emerge from higher timeframe key zones, as they also tend to deliver impressive returns and support informed decision-making, through comparative analysis. As always, keep tracking the entire moves of the individual signals, including those associated with exited trades, and provide feedback in the comments section. We showcase our Trailblazer Scalper Indicator's impressive performance with signals that follow the contours of the market, reflecting its inherent cycles of impulses and pullbacks. You can see an active short entry that precedes the 1320 sell signal on December 23rd, taken as soon as the setup criteria were met. This also showcases how anticipating signal generation helps streamline both signal validation and the trade filtering process. Let's examine the preceding signal moves and annotate them accordingly. If you're finding value in this content, subscribe to the channel, turn on the notification bell, like, share, and leave your thoughts in the comments. Moments later, price extends further downward, breaking well beyond the London range low, with our sell trade now exited. We then see a resumption of the upward momentum that triggers a buy signal at 1710, which has already delivered an 81-point move, measuring from the next bar open, with a negligible drawdown of 1 point. Be sure to keep tracking this buy signal move, as with the previous ones, and provide feedback on the maximum potential gains. As shown here, our preceding sell signal also delivered an impressive 155-point move, with a drawdown of just 7 points. You can see how this indicator strategy offered multiple trade opportunities, each delivering impressive moves worth capitalizing on. Moments later, a sell signal fires at 2200 hours after taking out the liquidity resting above the previous highs shown here. We can also see that the preceding buy signal being monitored has delivered a 187-point move so far, a real dynamite signal move for that matter. As the market draws to a close, we can see the last sell signal delivering a 56-point move with a drawdown of just 6 points. Moments later, the market reopens with a slight downward push, allowing us to update the sell signal move accordingly. Shortly after, a buy signal triggers during the Asian session at 2:40 on December 24th. You may want to include this in your signal monitoring homework assignment as well, as it helps illustrate how the indicator performs on a challenging market like US 30. On the next trading day, December 26th, we can see a sell signal fires at 1810, along with the corresponding valid active short entries that are currently running in profit. This setup allows the trader to capitalize on the initial downward move into an opposing area, provided there is a significant buffer between the entry level and the predetermined target levels, while factoring in risk-reward ratios. A retracement-based sell entry may subsequently be taken, following a pullback to retest the higher timeframe key zone of confluence. The H1 timeframe provides additional context, showing the market dropping into the price gap, where a reaction is more than likely to occur. Scrolling back, you can see how the entire move's unraveled up until this point, which helps to put things into perspective. At this stage, we will exit the sell positions to secure profits in anticipation of a pullback into the higher timeframe key zone of confluence highlighted above, a premium region where the weekly, daily, and hourly key zones overlap. The market did reach the opposing key zone below as expected, allowing us to capture the full sell signal move and annotate it accordingly. A buy signal also fired at 2140, after price emerged from the key zone just as anticipated. This move carries the potential to rally toward a retest of the upper key zone of confluence, from which the next phase of market decline is highly likely to begin. As the market draws to a close, we can see the last buy signal has delivered substantial gains so far with ample scope for further drive upward. We then get a gap up at the weekend open, as shown here, which is indicative of a potential further upward push based on our analysis. Moments later, a sell signal fires at 3:40 during the Asian session on December 29, after price emerges from our key zone of confluence, exactly as anticipated. At this point, we can confidently take a short entry, as the final setup criterion, liquidity purges, has now been fully met, failing which could result in undesirable drawdown. Note that, this is a master key signal, given the strength of the zone it originates from, which is suggestive of potential long-haul price movement based on this sell setup. Note that the preceding buy signal move now updates to 119 points. Having covered the applicable techniques and the various aspects of approaching the markets, be sure to provide feedback on your observations at this defining moment. On the H1 chart, the latest candlestick pattern forming within this strong zone also speaks volumes about the imminent market decline. We will now transpose the 340 sell signal onto the H1 chart for easier visualization as the market progresses. On the H1 chart, you can see the transposed sell signal arrow within the overlapping key zones, along with our first short entry level marked by the red horizontal line. The market then plummets and reaches the lower key zone marked in green, from which we can expect a corrective bounce. Note that the first short entry was closed before the New York Open to secure gains, as New York liquidity can easily retrace or spike price, wiping out floating profit. Having capitalized on the subsequent re-entry opportunities, the active sell positions are now running in substantial profit. On the 5-minute chart, note how the New York session price spike, a sharp 160-point pullback, could have triggered panic for short sellers who failed to close positions beforehand. Although the downward move resumed immediately within the same candle at the New York Open, capitalizing on re-entry sell opportunities following liquidity purges is often the more strategic approach. We can now close the active sell trades at this higher timeframe key zone, and monitor price action in anticipation of a potential market bounce. Moments later, a buy signal triggers at 2025 as price emerges from the lower key zone, following liquidity sweeps. At this point, we can see two active buy positions already running in profit. These are considered brief pullback trades, where a trader should avoid overstaying their welcome, as the broader structural context still favors the prevailing downward momentum. Needless to say, the liquidity generation footprint is clearly visible on the H1 chart, indicating that the market is rallying into a premium zone to gather momentum for a further downward move, along with the purging of the engineered liquidity seen here. Now, the first sell signal, which we will keep monitoring to obtain the maximum potential gains, has delivered a remarkable 345-point move so far, with a drawdown of just 15 points. We will now observe the market as price rallies toward a key area above equilibrium, from which the downward move may resume, allowing for the validation of any subsequent sell signals. Moments later, we see the anticipated market rally, allowing us to examine the initial upward drive and annotate the move accordingly. Note how price retraces from the New York range low turncoat level into a price gap, right within a discount zone as shown here, before the subsequent upward drive sweeps the previous high and extends up to the equilibrium level. Based on our Chic strategy entry option 3, this buy signal has already delivered an impressive 118-point move, as shown here. It represents a retracement-based entry that forms the second leg of the overall move. The buy signal has also been transposed onto the H1 chart for future reference and clearer visualization. A further push upward sends price above the equilibrium level, allowing us to update the buy signal moves to reflect this shift, both the initial leg and the second leg alike. We will now proceed with profit taking on the active buy trades at this stage, in anticipation of a potential market decline. After price completes the second leg upward, we begin to see a market decline, during which a sell signal is triggered in the Asian session at 3 o'clock on December 30th. Now, confirming the validity of this signal, you can see how price retraces into a premium zone after sweeping nearby liquidity pools, creating a high probability short setup worth monitoring. As always, continue tracking this sell signal to capture the maximum potential gains and feel free to share your observations in the comments section. Fast forward to December 31st, you can see an extensive downward move from our initial sell signal entry level, all the way into the lower key zone, where we begin to see a reaction in price. The December 30th 3 o'clock sell signal has also been transposed onto the H1 chart to put things in perspective. On the 5-minute chart, a buy signal triggered at 1400 hours, having delivered a 45-point move already with a negligible drawdown of just 1 point, measuring from the next bar open. Moments later, we see a further upthrust during the New York session, allowing us to update the buy signal move accordingly. The market is clearly gravitating toward the price gap above, having taken out the liquidity resting above the London and Asian range highs as expected. These are repeatable market behaviors, with signatures and footprints that play out time and time again. The H1 chart also shows price reaching a premium zone, where short setups should be explored, based on the directional bias at this market phase. We then see a run on the previous swing high, allowing us to update the buy signal move once again. Notice how price taps the mid-level of the price gap, with all the short sell setup criteria aligning to signal the anticipated turning point. While traders may enter a sell immediately, the New York Open is only seconds away. Exercising discretion is thus advised. Here comes the New York Open with increased volatility, where the anticipated market decline begins to unfold before your very eyes. A sell signal then triggers at 16:35, fully aligning with our market analysis. We then see a further downward move that clears the liquidity resting below this intraday low, along with the previous day's low, after which we get a pullback and a subsequent breach of the New York range low. The sell signal has delivered a 100-point move so far, with a drawdown of 21 points, which is striking, given that it is preceded by a large range candle, where a deeper retracement-based entry opportunity would also typically be expected. A move from the mid-level of the price gap currently reflects a 204-point decline in price, while our December 29th sell signal shows a 530-point delivery, right from our short trade entry level marked here. Following a pullback into the newly formed price gap, we see a further decline, allowing us to update the sell signal move accordingly. A move from the initial price gap, along with that of the December 29th sell signal, are also shown here to reflect this shift as the market reaches the lower key zone, where a reaction may be expected. Moments later, a buy signal prints at 2035 within a ranging phase, indicating the likelihood of a corrective bullish bounce into a premium zone, before any potential further decline in price. The sell signal move now updates to 131 points as seen here. The buy signal delivered a 63-point move with zero drawdown, measured from the next bar's open, sweeping liquidity and driving price into a premium zone, thereby creating conditions for potential sell setups. Price begins to decline just as anticipated, with a sell signal triggering at 2135. You'll also note that a move from the premium zone currently reflects a 131-point decline in price. On the H1 chart, you can see how price tapped the proximal boundary of the price gap within the premium area before plummeting, a key zone of confluence worth identifying in a timely fashion. The sell signal has delivered a 106-point move so far, with a 17-point drawdown measured from the next bar's open. You can see the preceding sell signal move now updates to 204 points with a 21-point drawdown. Also note the two pre-sell signal moves from the critical levels, yielding 309 and 207 points respectively. Our December 29th sell signal now updates to a 633-point move as shown here. Moments later, we get a retracement into a price gap within a premium zone, and a further market decline. Our New York session sell signal move now updates to a remarkable 255 points. The subsequent sell signal also delivered an impressive 158-point move. Additionally, the pre-sell signal moves from the sniper entry levels produced outstanding gains of 359 and 257 points respectively. Phenomenal moves overall, delivered right before your eyes. As the market draws to a close on this final day of the year, price is currently sitting within a gap that overlaps a turncoat belt, suggesting the likelihood of a corrective bullish bounce into a premium zone. Following that, we can anticipate a subsequent market decline in the coming days, as the lower key zone marked below remains unmitigated, where price returns to address this unfinished business, with the potential resumption of the overall bullish trend. Note, the December 29th sell signal has now extended to a 684-point move from our initial entry level, as shown here. Keep monitoring this to capture the full move before the dominant uptrend resumes. We've witnessed some truly epic signal moves overall. This brings us to the moment where we say goodbye to 2025, marked by the final printed candle shown here. Be sure to check out the channel pages to watch our debut video and all previous content on this Trailblazer Scalper Indicator, where we break down the techniques in greater detail, outlining the different applicable trade entry options using the Sheik's strategy. Thanks for watching. If you found this content insightful, smash the like button, comment and share this video with others. Subscribe to this channel and turn on notifications so you never miss our latest content. Explore more videos on the channel for deeper insights. See you in the next one.